Welcome to this week Phillip's Futures Weekly Market Watch. I'm Shao, FX dealer from Phillip Futures. For this week's episode of Market Watch, I will be sharing with you the outlook for gold and whether the bearishness for gold has come to an end. Before we move on, let's have a quick recap on how gold prices have been performing for the past few weeks. Previously, gold prices have been consolidating within a tight range above the 1,300 per ounce level. However, looking at the chart now, you can see that since 9 November, gold prices have been tumbling down, breaking the strong support level at 1,200 per ounce level and reaching a low of 1,175 per ounce within a month span. With regards to a price movement, I've listed out a few factors contributing to the fall of gold prices. First is none other than a recent presidential election that was held on 8 to 9 November, where Donald Trump was elected as the 45th President of the United States. Although pre-election period, Trump's victory was seen as a bullish sign for gold. However, after the result was being announced and Trump gave his victory speech, gold prices did not went as what market have expected, mainly because market was optimistic on how Trump is going to make America great again. With the introduction of various policies such as expansionary fiscal policies, infrastructure reforms, tax cuts, and the renegotiation of Trans-Pacific Partnership Agreement, etc., global market views it as the start of a better economy for the US, which eventually results in a rise in various market stock indexes. Second, market is therefore expecting a rise in interest rates in the upcoming FOMC meeting that will be held on 13 to 14 December. Coupled with the current US economic situation and a recent speech by Fed Chair Janet Yellen with regards to a raise in interest rates by the end of this year, I think we are confident enough to predict that there will be a hike sooner or later. Lastly, people are also already speculating that Mr. Narendra Modi, Prime Minister of India, will be looking to ban gold imports. Decades after decades, India have proved to be one of the main importers for physical gold. Therefore, with the ongoing rumour in hand, this could potentially affect the gold prices in the near future, as demand for gold will potentially drop. Will gold prices continue in its bearish state, and is there an end to the fall of gold prices? Looking ahead, what are the factors contributing to the gold prices movements? So here are the list of factors which in my view play some part in affecting the gold prices in the near future. The initiation of Article 50. Whether UK managed to leave EU successfully, it all depends on Article 50, as Article 50 is an official agreement binding both nations together. Next will be the inauguration date where Donald Trump will officially take over the White House. Lastly, will be a technical point of view on how gold prices will be moving in the near future. So, on October 2nd, Prime Minister Theresa May has said in the press that she will be looking to trigger Article 50 by the end of first quarter of 2017. Although during the triggering process, she was slapped with obstacles as the Parliament of the EU wouldn't allow the initiation of Article 50 unless the members of Parliament comes to an agreement. However, Prime Minister Theresa May reassured the people that the trigger of Article 50 will still go on. With that, I'm expecting if Article 50 is successfully triggered, we will be looking at another fall in the equities market and the British pound, which in return give rise to the gold market. As UK will be giving up access on a single market organisation that promotes free trades between the European Union and the UK. So with that in return, UK will be facing slower growing economy and lesser foreign investments from the outside world. Moving on, let's fast forward to 20th January, where Donald Trump will be officially taking over President Obama as the newly appointed US President. What's in for the US economy under Trump regime? Looking at the current market condition, we can see that Trump policies have managed to portray much positiveness for the US market. However, in my opinion, the day when Trump takes over, it spells tremendous uncertainty towards the market. As firstly, because on record, Trump has the tendency of flopping on what he mentioned previously. Thus, this gives rise to much more uncertainties under Trump regime, as he might be flopping on the policies he mentioned during the presidential elections In addition, as a president, I believe before any economic decision is made, serious consideration has to be looked through. Thus, I'm speculating that his policies might not be the same as what he proposed during the election period. With that, I believe this could have resulted in a slight correction of the equities market, which in return give rise to the gold prices. Lastly, looking at a technical point of view, using the start of 2016 as a reference for Fibonacci retracement, past few weeks we observed that the gold prices have broken the first and second Fibonacci retracement level at 38.2% and 15% respectively. So currently we are looking at gold prices heading towards price level of 1,171 per ounce, which is also the third Fibonacci retracement level at 61.8%. Hence, if gold prices reach the price level, it will give a good retracement outlook for the gold prices in the coming months. Therefore, with both fundamentals and technical coupled together, I'm expecting gold prices will be leaning towards the bullish trend in the upcoming months. We come to an end to this edition of Phillip Futures Market Watch. Thank you for joining me. I'm Shao, and I hope you join us again in our next edition of Market Watch. See you!